Welcome! Have you ever heard of a tax being called final? It sounds kind of simple, right? But it's actually a pretty special rule that totally changes the game for how certain income gets treated. So today, we're going to dive deep into Section 8 of the tax ordinance to figure out exactly what this, one and done tax system really means. All right, let's jump in. Here's the plan. First, we're going to break down what a final tax actually is. Then, we'll look at which specific incomes get hit with this rule. After that, we'll cover the three big restrictions, the rules of the game, really. We'll see how the tax gets paid and settled, and then we'll wrap it all up with the one key takeaway you absolutely need to remember. So, first things first, what in the world is a final tax? It's a term that sounds super straightforward, but it basically creates a whole separate track for taxing certain income, and believe me, the rules are very, very strict. So, what really makes a tax final? It's not just some fancy label. It means this income gets pulled out of your regular tax calculations and put into its own little world, with its own set of rules. Let's get into what that means. It's pretty much a one-and-done deal. The best way to think about it is like a flat fee. You get this specific type of income, you pay a set tax on the whole amount, and boom, you're done. Your tax obligation for that chunk of money is completely settled. No adjustments, no arguments, that's it. Okay, so we've got this one-and-done system. The obvious next question is, who does this apply to? This is not a rule for everybody. The law is incredibly specific about which types of earnings fall under this special final tax umbrella. And here it is, straight from the horse's mouth. Now, don't squint trying to read all the legal text here. The main thing to get is that the law doesn't mess around with vague descriptions. It points to the exact sections. You see in there? Section 5, 5A, 6, 7, and so on. It's a closed list, which means if it's not on the list, it doesn't apply. Simple as that. And here is that list, laid out nice and clear for you. We're talking about a whole range of income types that are covered in Sections 5 all the way through 7E. Now, we're not going to get into the weeds of each one, but just know this could cover things like income from exports, prizes, dividends. It depends. The big point is, if your income falls under one of these specific sections, these final tax rules kick in automatically. All right, now we get to the real heart of it. This is what makes the final tax system so different. It's not just about what you do, it's really about what you can't do. There are three core restrictions that really define this whole thing. And this lays it out perfectly. Just think of them as the three giant no's of final tax. First, absolutely no deductions. It doesn't matter if you spent money to make that money. You can't claim it. Second, no reductions. You can't use a loss from some other part of your business to lower this particular income. And third, no credits. Any tax credits you might have from other things? Sorry, they can't be used here. Okay, so you can't use deductions, you can't use losses, and you can't use credits. That brings us to the final piece of the puzzle. How is this tax actually paid and settled? How do you officially clear your name and discharge your liability? Well, that's also very specific. The law basically gives us two main paths. For some really specific industries like shipping and air transport, you're all clear once you pay the tax directly, following some other rules. But for almost everyone else, it's actually way simpler. Your tax liability is considered settled the very moment the tax is deducted at source. That just means the person or company paying you takes the tax out and sends it to the government before you even get your hands on the money. Whew, we have covered a lot. So let's bring it all home and boil it down to the one single idea, the most crucial point you have to remember about this whole final tax regime. And here it is. The bottom line is this: forget about net income. Just totally forget about expenses, losses, or any of those allowances. Under this final tax system, the tax is always calculated on the total gross amount of money you received. What you see is what you tax. That one simple idea is the foundation for all the other rules we just talked about. So there you have it, the final tax regime in a nutshell. It's a simple concept, but it has some really big implications. So we'll leave you with a question to chew on. Now that you know these super strict what you see is what you tax rules, how does that make you rethink your approach to financial planning? Thanks for tuning in to this explainer.